Good morning, everyone. Welcome to our opening commentaries on Thursday morning. It is July the 26th. This is Brian Hoops with Midwest Market Solutions and talking all the news overnight and what's in store for us today. So we've been talking in our newsletter and on these commentaries about the risk of being short. Traders are hesitant to be short, and this is an example of reason why. We're 18 higher in soybeans overnight, corn up about 6, and the wheat's 8 to 15 higher, led by Minneapolis once again. The risk being short here is you wake up and like we did see this morning, and this in fact happened yesterday, and we talked about it in our Market Insider TV closing comments yesterday afternoon, that the United States and the EU has reached preliminary agreements to kind of end their trade tariffs. They're still negotiating, working out the details, but it looks like no new tariffs are going to be enacted, and this looks to be friendly, especially since comments were made that the EU has agreed to buy more U.S. soybeans. Now, there's no numbers being floated to the surface yet about how many more soybeans that they're going to buy. But imagine if this was news about China agreeing to buy more U.S. soybeans, how much higher we would be. And this is going to keep farmer selling at a complete minimum until we get a trade agreement reached. There's absolutely no reason to be making sales here, and if you are forced to for whatever reason, look at re-owning those sales as we go forward this marketing year. So sharply higher here overnight, and this news here I think is friendly and an indication that there's trade agreements are going to be worked out eventually, especially with China, although it will take more time. August grain options expire tomorrow. The export sales, there's nothing out here this morning. There was no private sales this week. In fact, we had a cancellation of soybeans earlier this week to China. Otherwise, it's been a very quiet week as far as export business. There was weekly export sales, and these numbers were pretty decent. Corn at 43 million bushels, beans at 55, wheat at 14. Wheat numbers a little disappointing, but soybean numbers very strong for this time of year. Now, we are getting into this time of year where as we get into August, September, we start to see demand pick up a little bit for our products. Second day of the spring wheat tour has reported yields of 41.1 bushels per acre, still well below the 5-year average, above last year, of course, which was a disaster crop, but real disappointment. And we saw Minneapolis wheat sharply higher yesterday, sharply higher again this morning, giving us a lot of strength here in the wheat futures. As far as the grains go, we expect to see some more short covering during the day here today. Buying interest led by the soybean market and Minneapolis wheat. Fundamentally, demand for wheat not there, but supply-driven rallies are much more impressive. This is soybeans. This is a demand-driven rally in corn, kind of a demand-driven rally here as the European Union agrees to buy more products. Packers bidding 110 live against offers 115 to 116. Dressed bids 175, offers a little bit higher. Late week trade expected to occur once again. Hog weights just slightly higher than a week ago. Right now, cattle are called 50 to 70 higher based off of the August front month contracts. Hog futures expected to be a little bit higher as well. We hope you have a great day of trade, and good luck on your trades. If you have some questions, want to talk about some reownership strategies, I know a lot of people who are trying to finish up old crop sales of corn and soybeans here on this rally. Contact us, any of our offices. They'd be glad to assist you. Have a great day of trade. Brian Hoops from Midwest Market.